Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's get to some of the stories now we're following for you in the BNN Bloomberg newsroom. The White House says U.S. President Donald Trump and Chinese leader Xi Jinping agree that the Strait of Hormuz should remain a free waterway. Both leaders also agree that Iran should not be able to exact payments for the use of shipping lanes. Trump says the Iran war and the status of the waterway have loomed large over his trip to China. He called his meeting with Xi positive and productive and is seeking help from the Chinese leader in ending the Middle East conflict. Prime Minister Mark Carney says Honda's move to indefinitely suspend its Canada EV expansion is disappointing. The automaker decided to scrap the development of its planned $15 billion electric vehicle project in Ontario amid weakening demand and changing U.S. policy. Honda is now shifting its strategy toward hybrid vehicles. The announcement comes as it posted its first ever full-year loss. Honda says the loss is partly due to the higher costs associated with the EV transition and changes under the Trump administration. Canadian home sales edged higher in April as lower prices and the arrival of the spring housing season brought more buyers back into the market. According to the Canadian Real Estate Association, national home sales rose 0.7% from March, while the benchmark home price slipped 0.1%, the slowest monthly decline since October. New listings also climbed more than 4%. And a quick peek at the markets. Another banner day shaping up. Look at the TSX, well above, closing in on 34,300. It's up by 0.7% for today, continuing that nice run it's been on. South of the border, similar situation. Everybody's in the green. The S&P 500 above 7,500, up by 0.7778. The Dow Jones over 50,000 again, up by 0.68. And the NASDAQ, look at where it's at right now. 26,666. It's up by 1% right now. Well, Prime Minister Mark Carney announcing today Canada will double the capacity of its energy grid by 2050. Joining us to discuss what this means for the economy and more is Pierre-Benoit Gauthier, Vice President of Investment Strategy at IG Wealth. Pierre-Benoit, thank you very much for joining us today.
Happy to be here.
A reaction to the announcement today.
I mean, that's in line with the recent announcement from this government. I think that Mark Carney is trying to shape Canada as the place to be, to get your materials and your energy. And the guest just before me was saying that to build these grids and to build all the AI infrastructure, you're going to need materials. That is very true, and we have them in Canada. But you also need energy, and we are lucky to have the natural disposition to make this clean energy. So you can frame it as a green project all you want, but in reality, it's an economic project, and it's completely in line with the whole AI trade in itself.
Is it realistic? I mean, I think there's a $1 trillion plus price tag on this. Is that something that we'll see? Can it move forward, do you think?
That's the question that kills. Yeah. Honestly, we have heard so much of these in the last decade or even more that we have kind of grown cynical about it. I think that what is important to make these projects reality is a sense of urgency. And when you feel like, oh, it would be nice to do it, it would be nice, well, it's likely that these can get pushed aside. Now, Canada has put itself in a situation where it's telling the world we are trying to be a powerful middle leader, and there's only so much that speeches can do. You have to do something to prove that you have what it takes to take that part of the game, and I think that these kind of investment would do that. Is it realistic when it comes to manpower? Is another story. The money in itself, you can always find it, but the people is is maybe a little harder, but I guess that no one can be against apple pie, and we'll take these announcements, especially considering recent unemployment in Canada and news like you just said about Honda's scrap plans. So Canada is in dire need of some big projects, and I think that Mark Carney is very much in that opinion. It's not the first announcement of the sort.
All right. I want to talk a little bit about Trump in China. China and the U.S. I mean, U.S. Canada's biggest trading partner, and China one we'd really like to get to know a little better, apparently, according to our government. So what do you think of what unfolded over the last few days? Any surprises? And how does this play out when it comes to Canada, do you think?
Yeah. No, it's interesting because in the last couple of days, we saw that. I was a little worried about these meetings because I thought that Donald Trump looked to be in a bad mood. We saw some pretty special rants late at night on his social media. So I was afraid that he was going into China in a bad state of mind. But no, he did not look for a fight. Apparently, everything was discussed in a very positive way, and that could, if it ends up being a real détente, a real warm between the two countries, that could really push emerging markets higher. Because right now, emerging markets are in a funny position. Imagine that, Roger, that the Emerging Markets Index, is barely above its 2007 levels. We have just reached the all-time highs of 2007. How crazy is that? So it's got 20 years of underperformance in the bank. And lately, emerging markets have been doing great on the back of Korea. So when we think EM, we think always China first. But it's been Korea that's been driving the show lately. So if we could see a little easier relationships between America and China, that could help China get out of its little, I wouldn't call it crisis, but weakness, and join the parade, and that could lead to great outcome for EM. And the way it stands, if EM emerging markets are doing great, that's only good for resource demand and energy demand, and that ultimately always helps Canada.
All right. And looking south of the border, Kevin Warsh confirmed as Fed chair. And at the same time, we've got the 30-year Treasury yields that are hitting 5%. What can we expect from him where he's walking in this situation?
Brutal. Poor Kevin Warsh. He's been hired on the promise of lowering rates and making things more affordable. And you got now Besson saying, with Warsh in place, we're going to see disinflation. So the guy has been asked, so you got to drop rates and lower inflation at the same time. Okay, so that's quite the request. I'm not sure how we can do that. The markets have finally realized that cuts are not coming in the U.S. Why would they? You got a great economy, you got rising inflation and rising fast. I mean, it's not a slowly rising inflation. It's something else. On our models, it's not out of the realm of possibility to reach levels nearing 5 by the end of the year if oil stays up for a couple months again like this. So at some point, this inflation will have to get fought. And in Canada, it's different because the economy is probably too weak to fight it aggressively. But in the U.S., it's not. So Kevin Warsh is in a pretty peculiar spot because the way he's been brought in and the promise on which he's been brought in, I don't think he's going to be able to deliver it, or at least not in the timeline that people would have liked. Now, the market has already kind of accepted this, but there's always a line between accepting it theoretically and when it comes into reality. And Kevin Warsh has said that he wants to lower the communication rate of the Fed. I think that's probably going to face the test of reality because people are going to want a lot of communication. It's one thing to say, I don't want to do it, but when the market requires it, maybe he'll find he has to do it like his predecessors.
All right, we have to wrap it up there. Pierre Benoit, but thank you very much for joining us.
Talk soon.
Pierre Benoit Gauthier is Vice President of Investment Strategy at IG Wealth. Well, Canadian Tire reported its first quarter earnings. We'll have that after the break. Canadian Tire out with its earnings today, and the earnings per share down 7.3%, still beating analysts' estimates. Sales rose 3.3% to $3.5 billion. CEO Greg Hicks says shoppers remain resilient but discerning, especially as gas prices edge higher and the cost of living continues to rise. Joining us now with his take on the company's latest earnings is Bruce Winder, president of Bruce Winder Retail. Bruce, thanks as always for joining us.
Yeah, thanks for having me on, Roger.
All right, resilient but selective. How do you interpret that saying from the CEO?
Yeah, I listened to the earnings call this morning, and Greg Hicks, the CEO, talked about how customers are a little more value-focused. It probably has a little bit to do with elevated gas prices and things of that nature. But what Canadian Tire's done is they've lowered the prices on thousands of items, particularly under $50. And they're also bringing in another thousands of items coming up in Q2 that are value products that are below 50 as well. So that's one of the main messages I got from the call was that, Canadian Tire's reacting to sort of the economy we see right now.
And how are they doing that, lowering the prices? Where are they managing to find the savings?
Yeah, it's a great point. I mean, Canadian Tire, I think, is one of the best in Canada in terms of embracing AI. And they have a tool called David, which they use internally. And it allows them to balance margins while also identifying products that are price elastic. So they're really looking at that. They also have their Triangle Rewards ecosystem, right? They have almost 10 million members. And it allows them to really be surgical in terms of where to lower price on essentials for Canadians, but still hit their margin targets.
And going back to price elastic, what is that?
That's really that, some products, if you lower the price or raise the price, the volume changes a lot. And some products, it just doesn't. If you lower the price, it just doesn't change volume. So they have a way of identifying those using AI and doing it intelligently.
All right. And with the numbers from today, what's the ones that stand out for the positive for you?
Yeah, for me, it's just one of the things that stands out for the positives beyond the financials is how quick the company can move. So they made a lot of changes with their website on search and discovery for clearance and for pricing. And you know what? The Canadian Tire maybe 2 years ago wouldn't have been able to move this quick. So they've really been able to make some quick innovations because they've got rid of the silos, excuse me, and they're more centralized now. So I think they're able to be a lot more nimble. But, the numbers are good overall. If you adjust for the weather, because weather's been a bit of a headwind, as you can see, as you can appreciate, if you adjust for weather, it was a pretty good quarter.
All right. And what do you expect moving ahead? This quarter, I imagine, should be a good one for them just because it's spring and everybody is looking for all the things that Canadian Tire offers for spring.
Yeah, I think so. I mean, Q2, it's all weather dependent, or some of it's weather dependent, obviously, right? Because they're in the seasonal business, but they've got a whole bunch of products, like I said, coming in that are better value, and they're leveraging their partnership. So they have a partnership as well with RBC, WestJet, and Petrocan, and then later on with Tim. So these partnerships are really helping bring people into their ecosystem, the Triangle Rewards ecosystem, and that naturally helps their earnings because people who are part of that program just tend to spend more.
All right, and bigger picture, I mean, there's lots of competition in this sector, but Amazon with Alexa for shopping, do you see Canadian Tire doing anything similar when it comes to the AI? You mentioned the other AI parts they're implementing, but what about for the customer?
Oh, yeah, for sure. I mean, a lot of what they're spending, they partnered with Microsoft, so they have Mosaic, and they have a whole bunch of other things, David, I mentioned on the pricing. And they're able to use these AI advancements to really be more customer-centric. So they're competing with the big companies from the U.S. in terms of using AI to really meet customers where they are.
And is that across all three of the retail sectors for Canadian Tire?
It is. They are rolling out some of the AI through different banners, but in the near future, it's going to be across all their banners, and that's when you'll probably see things get even better. And
how did the different groups do? Was there one that outperformed?
Yeah, if you look at CTR, their comp sales were down 2. Sport Check was up 3.3, and Marks was up 1.2. So obviously, Sport Check's doing well. They're pretty excited about the World Cup too. They have a lot of great inventory in Sport Check in anticipation of the World Cup games in Canada.
Are they one of the sponsors, or?
I'm not sure. I think they are, but I know they have merchandise that's part of that too. But it's going to be a big sales event for everyone who participates in sportswear.
Yeah, I think a lot of people are excited about this, and we'll see what happens with it. Hopefully, Canada does well. What overall the sector? What are some of the challenges it may be facing over the next little while?
Yeah, I mean, it's really the elevated price of gasoline due to the conflict in the Middle East. That's putting pressure on the consumer. That's why they're more value focused, as we talked about. And consumers have higher expectations with AI as well. They expect retailers to meet them where they are, to talk their language, to make their life easier. So I think Tire has read the room, and they're doing more on those fronts.
All right, Bruce, we're going to wrap it up there, but thanks as always for joining us.
Yeah, thanks, Roger. Take care.
Cheers, you too. Bruce Winder, president of Bruce Winder Retail. Well, the federal government announcing a new national electricity strategy aimed at doubling Canada's power grid by 2050 while easing clean electricity regulations. We'll break it down after the break.
Canada will double its electricity generation over the course of the next 2 decades.
That was Prime Minister Mark Carney announcing a new national electricity strategy designed to double Canada's grid by 2050 as demand surges from AI, industrial expansion, data centers, and major resource projects. Joining us now to discuss this, Francis Sims, head of the School of Clean Energy at Humber Polytechnic. And Francis, thanks very much for joining us today.
Yeah, I'm happy to be here.
Okay, initial reaction to this announcement. Is it realistic?
It is ambitious, for sure. But what we are seeing in Canada and in Ontario is a huge demand for electricity driven by, as you mentioned, AI data centers. One AI data center can be up to 300 megawatts, which is the same amount of power as one small modular reactor. And we're building 4 of them in Ontario in the next couple of years. And then you have electric vehicles. I mean, they're up and down, but that's creating huge demand. And then electrification of homes as many people move away from other sources of fuel for their homes and moves towards heat exchangers. That's also driving demand. And so there's this huge need. And we're at a time now where energy is also talked about in the same sentence as sovereignty and security. And so I'm not surprised that the government is putting the stake in the ground that they want to double that demand. It is ambitious, but when we talk about nation-building projects like the railway, you have to show ambition.
What did you like about what he had to say, and what do you feel was missing from it?
Well, I think that 80% of Canada's grid is already non-emitting. What we don't know yet, and hopefully it comes out in the strategy, is exactly how that's going to roll out across the country. Right? If you look at, say, Nova Scotia, there are a number of offshore wind projects. In New Brunswick, you have nuclear there, as well as fossil fuels. Quebec and BC, you have hydro. It's complicated because the fact is that the regional areas of expertise are not the same across the country. I think there's the nuclear renaissance, which we're hearing a lot about because of data centers, but you can't do nuclear in every part of the country. And nuclear takes a long time. Nuclear can take 5 to 10 to 15 years to build a reactor, assuming you have the social support. And then the other piece is moving that electricity across the country. We're better connected with the U.S. than we are, between provinces. Premier Ford here in Ontario likes to talk about the fact that we power 1.5 million homes in the U.S. That's because it's easier for us to send the electricity south. So I think what we're seeing is ambitious targets. What we don't know yet is the detailed operational plan that's going to back into that to show that's how it all comes together.
Could we see it? I mean, could part of the grid be going through the U.S. rather than trying to run it directly across the country? Is that feasible?
It is feasible. I think we heard Prime Minister Carney talk about ahead of the CUSMA negotiations that we might see even more integration between Canada and the United States, and that's definitely one area. But I do think that there's a huge need in Canada, like we're seeing in countries around the world, to ensure that the energy that we're using is being generated at home. Because as we've seen over the last few months, relying on getting our energy from outside the country, especially with gas prices, is proving to be extremely expensive. And affordability is a huge concern for Canadians. What the Prime Minister said in this statement is he expects the cost for energy for 7 in 10 Canadians to go down as a result of this investment, which if he can make that happen is great, because I think affordability is front and center for anything that happens in Canada now.
Now, one of the things they are signaling, Ottawa, more flexibility around clean electricity regulations, acknowledging a strategic role for natural gas. Is that concerning? Are you worried that this might push oil back into the center, or not so clean ways and deter people from going greener?
Mm-hmm. What we're seeing, I think, like in Canada, we have 80%, like I said, of our energy is already relatively clean. I think gas, those other forms of energy play a role in the energy transition. We're not going to, if you go to a province, say like Saskatchewan, which I've discussed about their nuclear project there, they have nuclear ambitions in southern Saskatchewan near Estevan. That's going to take them 5 to 10 to 15 to 20 years to build. And at the same time, Bell just announced one of their new, AI fabric data centers that they're building next to the University of Regina and Sask Polytechnique. So the only way that they're going to fill that capacity is probably leveraging other forms of fuel that may not be like nuclear and renewables. So I understand that part of the energy transition, if we want to go to completely a nuclear and renewable space, it's going to take time, and we can't have our eyes closed and just assume it's just going to happen if we don't think about ways to get there.
And one last question. Is the private sector, is there an appetite there to get involved in this?
100%. One of the things that I think is really exciting is that part of this energy security piece is actually starting to, in many countries, are starting to fold it under the NATO targets that everybody has to commit to. And there's a lot of talk. Once you do that, there's a lot of talk about dual technology, use technology, where the private sector is delivering to defense and delivering to, things like energy generation. So, and the other thing that I think is really exciting is that there's expected to have 130,000 new jobs that are going to be created by 2050 as a result of this. And those jobs are going to be in the communities. They're going to be high-paying jobs where the energy is being built. So I think that's another real positive thing, is that hopefully it means, a bright future for our young people and people that are retraining and upskilling for years to come.
Okay, we have to wrap it up there, Francis, but thank you very much for joining us.
Thank you for having me.
Francis Sims, head of the School of Clean Energy at Humber Polytechnic. Coming up, Bird Construction reported a first quarter revenue beat. We'll speak to the company's CEO on that and more. Stay with us. Manulife Financial is one of the biggest decliners on the TSX today after the insurance firm posted first quarter profit that missed analyst expectations. It's off by 6.3 right now. Manulife says the results were due to a challenging insurance environment in Canada and the U.S. On the upside, the company continued to see growth in its international segments and wealth management operations. There was also momentum in Asia, and where earnings were up by 22%, driven by strong demand and new business. Shares of Brookfield Corporation are trading higher today, up 7%. The investment manager posted revenue of $18.5 billion US in its most recent quarter and reported total assets that surpassed expectations. The firm also plans to combine with its insurance business, Brookfield Wealth Solutions, as it streamlines its corporate structure. Brookfield says it is also evaluating a similar plan for its two infrastructure and two energy entities. AtkinsRéalis shares moving higher, slightly right now, up about 2%. The company posted stronger than expected first quarter revenue as demand for nuclear projects and infrastructure work continued to grow. Revenue rose 18% from a year ago, while adjusted profit also topped expectations. Atkins has been seeing strong momentum in its nuclear and engineering services units and says governments and utilities are increasingly investing in energy security and aging infrastructure upgrades. And another good day for the markets. The TSX, you can see, is up by 0.66% right now, pushing well over 34,000, nearly 34,300, eyeing record territory again. And south of the border, similar situation. Everybody is up right now. The Nasdaq's back off a little bit, but still up by 0.78%. The Dow back a little bit as well, hovering around that 7,500 mark. Well, we are watching shares of Bird Construction today. The Canadian construction company reported a beat in revenue for its first quarter and a record backlog. Let's bring in Terry McKibben, CEO at Bird Construction. Terry, thank you very much for joining us.
Thanks for hosting me, Roger.
Some good numbers for you. I'm just looking at them. Construction revenue beat estimates and up over 9%. Where's that coming from? Where's the success?
It's a mix. I think our business is nicely positioned across Canada. We've seen some real strength now in our building business as it's been. It was a business in 2025 that had some pressure on revenue, but as we enter 2026, that business now is starting to move and some good strength there. Our infrastructure business, where we work across a number of different sectors, has had good strength. We acquired Canada's largest marine construction company last fall, so that obviously helps our performance in the first quarter with lots of activity. And all these nation building projects that have been announced obviously give us tremendous confidence in the future.
And with the backlog you mentioned, it was a record backlog. And then you're adding the AI data center from BCE, our parent company. Does that put any pressure on you, or are you confident that you can handle all that?
Yeah, we've been working pretty hard, and we felt it to a certain extent in our SG&A of the company, because we work really hard to assemble world-class teams to be prepared for this. And we've been working on, for data centers, for example, we've been building smaller data centers, but most importantly, assembling the teams. So we employ one of Canada's largest armies of electricians on a regular basis. We can ramp up to as many as 3,000 electricians. So that obviously positions us in a good spot to be able to manage the delivery. And I think in a data center, electrical mechanical is typically the critical path. So we're highly confident that we're well positioned for this new strategic partnership.
And that first phase is targeted to come online in H1 2027. What milestones are you setting for it, and how is it shaping up?
Yeah, so we just signed our agreement last night, and so there is a site development contractor that's well underway on the site, and we'll be mobilizing our teams now and getting spooled up. Obviously, that's the first phase before we can get on site. But once we get on site and start, all the infrastructure that's required for the project, this will accelerate very quickly.
And do you see this being a focus for you, the larger data centers?
Well, I would say we're built for this. So, but obviously this partnership is very important to us. It's certainly I would call it a foundational partnership for the company. It'll be multi-year, based on the framework that we've set up, and we're generally excited. We have other clients we've worked with and worked on development. So, but this will be certainly one of the big anchors for us as we move our business forward in this vertical.
And in the earnings call, you mentioned the Ring of Fire. Excuse me. And the Bell AI Fabric is going to translate into your second quarter results. Any estimates right now on how much it will translate?
Yeah, we haven't. We typically won't. In our external reporting, we typically don't report on individual projects. Obviously we look at our performance of our business overall, but I think we'll have a little more color as we get into our second quarter guidance and that. But yeah, we expect this to ramp up quite significantly. And the Ring of Fire is certainly another transformational project. In 10 days, we've had 2 transformational announcements, and we're certainly excited about both. Different teams within Bird. We have a number of different teams that are organized to focus on certain sectors. And Ring of Fire is certainly very exciting as well for Ontario.
It's not a bad thing to be able to say transformational a couple of times. I don't think there's anything wrong with it.
We don't say it very often.
Your margin expansion path, the analysts are looking at 8%. That would put you right at the upper level, top tier. Do you feel confident about that? And what gives you that confidence?
Highly confident because we have such a clear line of sight to our backlog. We're running over $5 billion in backlog, and then we have what we call pending backlog, where we've been, notified that we're preferred proponent, but we haven't finalized to reach FID yet to have a formal contract. So we call it pending. So we're at $11 billion in backlog and pending backlog. We rarely have an assignment that we have sitting in pending that drops. I think it's only happened once or twice in the last 5 years. So we're pretty excited about, and that gives us this line of sight. When you have $11 billion of backlogs, it gives you, pretty clear line of sight. The margin profile of that is accretive to our current performance. So our 8% target for 2027 feels like it's well in hand.
All right. And you've got growing free cash flow. What are you considering with that? Dividends, buybacks, bolt-on acquisitions?
It's a mix. I think Bird has traditionally had, certainly a solid dividend, a dividend approach. 33% of our net income is allocated to dividend. Acquisitions have been a very successful component over the last 6 years. We've been sort of on a cadence of acquiring one or two companies per year. So a portion of that, that free cash flow is certainly associated with that. And then obviously the growth of the business and having the capacity to fuel this organic growth is certainly. So those are the three elements I think you would say are the most, the big priorities.
And with the acquisitions, do you see some opportunities out there over the next year?
Yeah, certainly. It's we've developed, I would call, an impeccable track record of integrating acquisitions, and with the momentum we have as a company, our phone rings, about opportunities, and we've developed a capability that we're really good at it, and companies feel comfortable with the dynamic of integrating into a large organization. Certainly, often lots of concern around that, but our reputation and track record has been really impressive, and we have a team that really just focuses on that on a full-time basis.
All right, we have to wrap it up there, but Terry, thank you very much for joining us today.
Thank you. Thank you very much.
Terry McKibben is CEO at Bird Construction. Well, Honda has suspended development of its planned EV project in Ontario. We'll have more on that after the break.
It's a decision about additional jobs, not current jobs, as you know, in Alston, but it's a disappointing decision. It's a decision that reflects the broader strategic position and financial position of that company. It's part of a global series of decisions that they've taken.
Prime Minister Mark Carney reacting to the news. Honda is indefinitely suspending its Canada EV expansion. Obviously not happy with that move. The company confirming the development of its planned $15 billion electric vehicle project in Ontario is on hold as the company shifts its strategy toward hybrid vehicles amid weakening EV demand and changing U.S. policy. Joining us to discuss this further is Flavio Volpe, president of the Automotive Parts Manufacturers Association. Flavio, good to see you. How are you, sir?
Good. How are you?
Your reaction to, this has been talked about. We've known about it, making it official, I guess, this cancellation. Any surprise about it?
No, but I think context is important. This is a company that is one of the most disciplined, if not the most disciplined investor in the global auto space, and one of the most committed investors in Ontario. Anytime there's been a crisis, 9/11, financial crisis, COVID, they've never laid anybody off. They never stiffed any suppliers. They stay solid. They've booked their first annual loss in their history. And that's because of the trade dynamics. That's the cost of moving cars into the U.S. and then cost of moving parts in and out, and what these tariffs have done to steel and aluminum costs for them. And then overlaid on that, look, 2 years ago, you and I talked about the biggest industrial investment in Canada's history and the biggest investment in Honda's history was going to lead the way for electrification. But the Trump administration changed that. They took away purchase incentives for EVs in the U.S. They took away production supports for supply chain, battery costs, and then they got rid of the EV mandates completely. Here, of course, we had similar ones. They needed to be adjusted, and they were. But he's taken the wind out of the market that plant was supposed to sell cars to, and increased the costs for the company that's supposed to make that investment to the point that, unfortunately, they had to make a really tough decision. But it doesn't change anything about their amazing ongoing investment in Alliston, Ontario. I think it's probably the biggest single industrial site by employee count in the country.
Now, I mean, in politics, people change, things can change. Is this dead forever, or do you think this is something they could bring back if the situation changes down in the States?
Well, the same CEO was talking last few days ago about the Chinese and the rate of product development in China and process development in China. And he's talking about an existential threat for his company and the industry in the Chinese market, and also acknowledging that threat is being exported to other markets here. So I don't know that this thing is going to be back on 3 months from now, 9 months from now, 18 months from now. The decision has been made because of the tariff environment and because of the no longer having the supports for the ramp up of the industry, the electrification. But that third hammer's coming, and it's China. And all of these companies, these legacy automakers, are going to be looking to conserve cash and to defend core markets. And neither one of those things is EV sales in the U.S.
And so what does that mean for the Chinese EVs that could be coming into Canada? Does that mean we'll see more of them, or is this going to, will their sales stagnate here probably as well?
No, I think, look, we heard the Magna CEO at an event this week talking about like priorities that countries need to pick. Do you want advanced manufacturing jobs? Is that your priority, or is affordability your priority? Because in the short term in automotive, those things don't reconcile with each other. And Canadians, if offered really cheap Chinese cars, regardless of why that cost is, and they're going to get 49,000 of them this year without the 100% tariff on them, and they'll buy them. We've seen that in Western Europe. We've seen that in Mexico and other markets that are very similar. What it means for companies like Honda and all the other market-driven players is we see just how difficult it is to make a go of it in electrification, even though it's the right thing to do, even though they're superior products. Why don't the Chinese have the same problem? Well, the Chinese are not worried about the first-time annual loss for a Honda. They've got 104 car makers that are in extreme competition with each other, and they're in their home markets, and so they're increasingly exporting that excess capacity. It's a completely different dynamic. Honda's news should be read out, or it's being read and analyzed at General Motors and Toyota and Ford and Stellantis and Renault and every other Western car maker around the world as another indication that either we're going to band together and figure this thing out, or we're all going to lose to the Chinese, who don't have Canadian content, who don't have American technology in them, who don't have French steel in them.
All right, and we're just about out of time, but I want to ask one last quick question. You're on the Prime Minister's Trade Advisory Council. What's the latest there?
Well, we continue to meet and share data points that are useful for the negotiating team. All of us are watching for USTR Ambassador Greer speaking to Congress, expected on June the 1st, where he's going to tell Congress what the Trump administration's intentions are with the USMCA review, renewal, et cetera. And we'll use those signals to help give careful insight, networking, and data points to the Canadian negotiating team.
Is that kind of like T-Day, trade day for us?
I think it's a very important one, and I think we all should be watching. And we all should be watching for feints and real signals, and trying to make a real analysis on are they telling us what they want to do, or are they telling us something that they want us to react to that gets them off the ball? We should all put our thinking caps on.
All right. I think a lot of people probably are. Flavio, thanks as always. Good to chat.
Thank you, Roger.
Flavio Volpe, president of the Automotive Parts Manufacturers Association. Still ahead, today's market movers with Bloomberg's Matthew Griffin. Joining us now for some movers south of the border is Bloomberg Equities reporter Matthew Griffin. Matthew, how are you?
Roger, I'm doing great. How are you?
I am excellent, but I'm probably not as good as Cisco right now.
No, Cisco, the networking equipment company, shares up as much as 17% earlier. That's their best day since 2011. Still holding on to a lot of that gain. This is the latest company to lay off employees as it focuses on AI. In this case, it's not that they are going to replace work with AI, but rather that they want to invest in the portion of the business that's benefiting from AI. So Cisco said it will lay off no more than 4,000 employees. That's about 5% of its workforce. And instead, they're going to invest in things like fiber optics, like security, so that they can sell more products to data centers. It's been a really booming business for the company. They now expect $9 billion worth of orders from these hyperscalers, so the large data center operators this year. And they also reported some strong quarterly results that are contributing to the share surge today.
All right, let's move on. Let's get into Legence. Is that how you pronounce it? Legence?
I think in this case, Roger, you're usually right that it's French. I think this one is Legence.
Legence, okay.
And I don't know exactly
so close.
What
First
the
time
root
I've seen
of that
the name
is.
I like my French. I like my French pronunciation on it.
I'm sorry to disappoint, and I'll ask the company. I'll put it in a line. But this stock not doing so great. Shares bounced back a little, but still down nearly 9%. This stock had been on a tear since its IPO in September, up more than 250%. It's an industrial company. They do things like installing HVAC systems, engineering services, and they sell to data centers. So another one of these AI-fueled industrial stocks. Today, they reported results that were not terrible at all. In fact, they raised revenue and profit guidance for the year, but it just didn't seem like enough to keep that rally going higher. One potential soft point was their book-to-bill ratio fell, so they are basically still bringing in orders faster than they send out shipments, which is a positive, but that gap has narrowed. So it's a sign that growth here might be slowing a little bit, and for a high-flying name like this, that's enough for investors to punish the stock.
All right, and the owner's first name is Al. That's a dad joke right there. Never mind. I'm not even going to explain it to you. Okay, bullish latest crypto firm to have a post-earnings sell-off. Tell us more about that.
Yes, and I should say, Roger, one day I'll ask you to explain that joke. But for now, bullish. This stock was down double digits earlier, but has bounced back a bit. This is a crypto exchange. They reported somewhat dismal results this morning, like a lot of crypto companies lately. Their revenue from digital asset sales was down 35% year over year. They also reported a widening net loss, $3.85 a share US versus $3.05 in the year ago quarter. And what is helping the stock rebound may actually not be anything company specific. We actually just had the Senate Banking Committee here in the U.S. advancing crypto market structure legislation. That's seen as a positive for the industry. So it's lifting crypto shares. That seems to be giving the stock a boost. But again, the long-term story for this company doesn't seem too healthy to investors right now, as is true for a lot of crypto companies with Bitcoin and other digital assets still trying desperately to claw their way out of a slump.
I'm surprised that, crypto feels like one of those areas that it's just a bit of a Wild West. They don't want rules. But I guess a lot of them, if you're in it now, they want those rules set up, don't they?
Yes, and they want clarity over who regulates the industry. So the heart of this bill is that it establishes the Commodity Futures Trading Commission as the main regulator for a lot of the digital asset industry, and that they think will allow firms to grow, give them some regulatory clarity. It does not regulate them as securities. This is something a lot of players in the industry have wanted. So yes, they will be subject to regulation, but they will know what regulation, and that's being seen as a positive. All
right, we got to wrap it up there. And Al, Allegiance. Thanks, Matthew.
Oh, all right. Well,
we're going to go on that note. Have a good one, Matt. Bloomberg's Matthew Griffin. And that wraps up this edition of Trading Day. Have a great afternoon.